Hi, my name is Ian Parker, and this presentation is about understanding social housing statements. Obviously, this is not going to follow the format of an Open University lecture because, for one, I don't have long hair and a beard, so my aim is to keep this presentation short, sharp, and focused. The presentation has two key objectives. I want to explain the standard layout of the financial statements and identify who uses the financial statements and who should use them more. Who are the stakeholders who use the financial statements at the moment? Well, they're the regulator, obviously, the Financial Conduct Authority, the Charity Commission, Companies House, the board, funders, investors. But this presentation will actually focus on the information that is useful to tenants and staff. When I'm talking about staff, I'm talking about existing employees and potential new ones as well. As you can see on screen, I've used Riverside's financial statements for the year ended 31st of March 2020. Because they are a national provider, they have very diverse activities, general needs, supported, low-cost home ownership and outright sales. They're a group structure, and they manage around 60,000 homes. Their financial statements are a very glossy publication, about 120 pages long, which seems excessive, but there is such a lot of information in there. Well, let's start off by looking at the contents. And as you can see on the contents page, you've got all the listing of all the main statements. I'm not going to go through those. We will look at some of those as we flip through the statements. And these statements start off with a very strong statement there, which says, these statements demonstrate we are in a strong position to deliver our vision of transforming lives and revitalizing neighborhoods. As you can see on that page, on the neighbouring page, there are a summary of the financial figures. I've highlighted some of them, the key ones. So the operating surplus, as you can see there, is 59 million in 2020. Surplus as a percentage of turnover has dropped to 8%. Statement of financial position tells me that they've got tangible assets of £2.2 billion and loans and liabilities of nearly £1 billion and reserves of £500 million. There's a little diagram at the bottom that explains that their operating surplus has gone down over the last few years, and that's mainly due to the fact that they've been investing in their homes. If you want more detailed information about the financial statements, you looked to the notes to the detailed financial statements and the notes that accompany them. Let's go and have a look at those main statements. Here we have consolidated statement of comprehensive income. I'm going to pick on only a few items here, but as you can see there, it's saying in 2020 turnover was 355 million, nearly 356, and the surplus overall for the year after tax was 28.5 million. Adjustments on the pension scheme mean that the reported surplus was 54 million. Looking at the consolidated statement of financial position, you can see the 2.2 billion pounds worth of assets I've referred to. You can see that they've got cash in hand of 62 million. And you can see that their reserves stand at £500 million. We'll go into those in more detail. As you can see at the side there are numbers. They are the note numbers, and they are referred to later on within the financial statement. Let's have a look at another key statement, which is the consolidated statement of cash flows. This shows the cash that's come into and out of the business. From the business, it's generated 131 million. Before, you paid interest of 34 million, before you paid for capital expenditure of 271 million, and overall the cash outflow before financing is 179 million. Loans have been taken on for 158 million and have repaid loans of 23 million as well. So overall, between the 2 years, cash has gone down by nearly 44 million. Cash flow is so important to a business, any business. Social housing providers are no different than any other business that you'll come across. Right, let's just go to the strategy. Within this document, as I say, it's 120 pages, but half the document is purely narrative, which explains what's happening with the business. And as I said, tenants, employees, and new employees can really rely on this information and need to understand the information that's available. So let's look to the strategy first of all, and we'll go back to page 3, and there is the strategy, and there's the board who actually formulate the strategy. As you can see there in the highlighted bullet point, the board is responsible for Riverside's overall policy and strategy, and is committed to integrity and accountability in the stewardship of the group's affairs. Those are the members of the group board, and those are the members of the executive team as well. There's also corporate information such as registered officers and principal bankers there. Let's move on to the next section, which refers to strategy. The chair's statement tells you what's happened over the last 12 months and where the business is going. We move to the chief executive statement. There's even more information about the past performance and future performance, and a little bit more context over the next few years as well. A lot of detail within this statement. If we go to page 9, it explains what the structure of the organisation is. Whole details are there of all the subsidiaries and the group company as well. And if we go to page 36, you've got details of the board and committees and the members of each of those forums as well. As I've said before, tenants, employees and new employees should want to know about that information. Moving to the next section, which is referring to rent levels, you want to know whether the rents being charged by your organisation compare with others. Well, here in the highlighted section here, it says that Riverside rents are lower than its peers. On average, it's £10 a week lower than its peers and for general needs homes. So as a tenant, you want to know how your rents compare. As an employee, you want to know the resources that are coming into your business. And as a new employee, you want to know how the business you're looking at or considering joining is comparing with others. Let's move to 64, which gives you your gross rent levels. Well, just looking there, you can see that the net rental income there for 2020 was 291 million, and turnover from lettings overall was 305. This is note 3, and it shows that the net rental income for 2020 was 291 million, and the turnover from lettings overall was 305 million. Also, there's market rent of nearly 3 million. This gives you more detail. The notes provide more detail to the financial statements, and they really do need looking at. All the people I've mentioned, the tenants, employees and new employees, may be interested in that level of detail, but I'm sure that the employee and new employee would want to dig deep. The notes provide more details to the financial statements and give you a greater context of the business. Let's move down to satisfaction levels now. Of course, with any business, whether you're wanting to join them or whether you work for them or whether you're a tenant, you want to know how it's performing and the level of satisfaction that its customers feel like they're achieving. Well, on new homes, Riverside's doing very well, and the bullet point there, it says over 96% of customers would recommend the business to a friend. So that's ideal. However, the area what you also want to know is what's the satisfaction of existing tenants? Well, there is within a sector a measurement known as a Net Promoter Score, and unfortunately in this one the overall satisfaction with the service has reduced. They explain there that it's coincided with a period of major change as the group established a new operating model. So there's reasons behind it. I would have expected the actual figures to be reported here, but I'm sure they will be going forward. As a tenant, you want to know if the organisation is going to continue to invest in your home. And as you can see on this page, there is a picture of investment work and new build taking place. And it's saying here, we have invested heavily in the supply of new housing and improvements in our existing stock. So they're being upfront about it. They're explaining what they're doing. If you look to the value for money section, you can see the percentage of reinvestment expressed as a percentage of turnover. If you look to the VFM metrics, there is a measurement on reinvestment there, and it compares with others. It's slightly lower than the benchmark results. However, if you look to the explanation here, it goes on to say there is an increase in investment spend planned for the next year through a programme to maintain our stock to ensure we meet all regulatory compliance requirements and complete our retirement living investment programme. Increased spend is also planned for responsive repairs and walk works, which will be completed to a higher standard, and cyclical repairs. So there is a programme there and there are resources set aside. If we move to the notes, I can see the level of expenditure during the year. And in note 11, it's saying that improvements to existing properties for the financial year we're looking at amounted to 34 million. So a sizable investment. Let's talk about the homes in management. How big is this organisation? And if we go to the homes and the variety of homes as well, note 30 gives all the details on the different types of tenure that are being offered across social housing, those which are management only, and the non-social housing, and the development at year end. And as you can see, there's 1,300. So as I say, around 60,000 properties in total. As a tenant, you also want to know how your organisation compares to others in terms of value for money. We have looked at this table earlier with regard to reinvestment, but there are a series of VFM metrics that the regulator says that every landlord must report. These are the metrics. There are 9 of them in total. There's the 2019/20 results, and there's the benchmark results for the previous year. I'm not going to go through them in detail. However, a couple items I want to pick out are the fact that the operating costs per unit are higher than the benchmark, nearly 5,000 against 3,300 per unit. And in addition to that, their operating margin, the gross operating margin, is lower than the sector average as well. So those are issues which they give explanations to within the next few pages. And they do go into detail to explain where they are going with the operating margin and the cost per unit looking forward. As an employee and a potential employee, one of the issues you want to know about at the moment is this organisation going to merge? Very upfront about it here. They're saying that Riverside has been active in exploring the role that mergers, acquisitions and partnerships can play in improving services for customers and increasing the capacity to invest more in building and managing homes. We have been deliberately taken a strategic approach to identifying the circumstances in which bringing partners into the group could have tangible benefits and defining more clearly what Riverside has to offer. That's a really pragmatic view, and Riverside have merged with a number of organisations over the last few years. So what they're saying is they're leaving the door open. It's clear what they want to do. They want to merge with others, but it's got to add value to the business, which is a benefit to the tenants, the existing employees, and of course, new employees. How many employees do they have? Well, again, there's a note that explains it and also talks about how they're going to work going forward. They talk about agile working, which is there. And of course, with COVID-19, they've had to enhance their facilities. They talk about equality and diversity, both within the board, committee, and workforce. So it's useful to know that as well. And on page 68, note 5, again, the notes were referred to within the financial statements. It tells me that they employ nearly 3,000 people. Finally, if you're an employee or a prospective employee, you want to know about the pensions. There is a huge note on pensions. Note 26 goes on for about 6 pages, and it explains all the pension schemes they have. Because they're a merged organisation, they've got a number of pension schemes, so they give complete details about those and what the deficits are or surpluses are on each scheme. I'm not going to go through it in detail, but all I will say is the only pension scheme that they are now operating is a defined contribution scheme. All others have been closed. It's worth knowing that if you're thinking of moving from an organisation and you're in a defined benefit scheme, you want to know what type of pension scheme you would be allowed access to. That's all I want to say. I hope you found it useful. I hope you found that it was focused, and most importantly, it's delivered the 2 objectives that I started with, which are to explain the standard layout of the financial statements, identify who uses the financial statements, and who should use them more. Thank you for your time.